Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, DRDGold plans to sell Blyvoor and ERPM to focus on surface reclamation. GFMS sees the gold price topping $1,600 an ounce by year end. An avalanche of interest as South Africa's minerals cadastre goes live on the internet. And old gold fundamentals are passe, says Barrick Gold's Peter Munk. South African gold miner DRDGold says that it will opt to sell the majority stake in its Blyvoor underground mine in an effort to align its focus on surface reclamation operations.
We've been talking to the market for a while now about separating our two asset classes, the surface reclamation and also the underground. So what we're really looking for is positioning those two assets for two different investor types and seeing if, to see if we can get some value for our holding in Blyvoor now that our strategic focus has really moved across to surface reclamation.
Independent precious metals research consultancy GFMS reports that growing geopolitical uncertainty in the Middle East and North Africa and macroeconomic uncertainties in the US and Europe are the main drivers that will see the gold price peak at well over $1,600 an ounce before the end of the year.
Well, in many respects, the Middle East crisis is a positive for gold. You know, the primary drivers of higher gold prices is the macroeconomy globally, the United States, Europe, and elsewhere. But overlaying that, there's obviously a non-economic component or a quasi-economic component, which is the crisis there in the Middle East, possible impact on oil, and consequently people taking a safe haven bet into gold. When it comes to Japan, I think the direct influence on the gold prices is probably not that dramatic, although there have been instances of some fairly positive buying of gold in Japan on the back of this, although at the same time there's also been some distressed selling of gold in Japan. So it's difficult to really tell what the overall impact will be from the Japanese perspective, but certainly the Middle East is playing very strongly into higher gold prices.
More than 1,000 registrations were recorded in the first 3 hours of South Africa's impressive new mineral cadastre going live in April.
We are confident that the new system will enable us to tap into the market and ensure that there's increased exploration.
There's a viewer where people can view exactly where rights are, rights that are in process, under application, rights that are granted, open land. That's been the question that we've had for the last 7 years. Where is the land that's available? Now one can view that for every different commodity in the country. There are 52 different minerals in this country, and you can go through and select each one of them.
The traditional supply and demand fundamentals that have determined the gold price in previous decades no longer apply, says Barrick Gold chairperson and founder Peter Munk.
Let me just say to you categorically, and hear me loud and clear, this company has been built on creating the greatest gold company ever. In reserves, in balance sheets, in profits, in cash flow, in production and future prospectivity. There's no one better, never has been anybody better in our gold industry. Do not think that something that we have worked for 28 years like we have, and something that we are as proud of, as committed to, and which from my point of view, and I think I can speak on behalf of my board, is part of my legacy, is going to be given up. This company will continue relentlessly to take advantage of what I see, and our board agrees with seeing coming, the increasing gold price evolution, the lack of gold availability, the more difficulties in putting mines on stream. After all, we work for our shareholders, we work for our company's betterment. We'd be foolish, suicidal, and totally wrong to our heritage and to what we believe in if you'd ever contemplate letting go for a single second of our primacy in our gold industry. Having said that, and let me just say something, who is so idiotic to kill the goose that laid that golden egg. And some golden egg this is. So you're not going to give it up. Hardly. On the other hand, it'd be equally foolish to fall in the trap of many companies that were riding high but refused to change, refused to have their eyes open, had shutters and disappeared in the textbooks of history because they were reluctant to change. We have copper, and copper requires the same skills, the same know-how. Hey, with passe we got copper. Hey, with Cerro Casadas we got copper. Wherever we look today, gold and copper go hand in hand, same skills, same people, same know-how, exactly the same. Except there's one difference. These copper mines happen to be longer lasting, have a longer life, because gold by definition is short in availability, so they have shorter lives. And when you have an opportunity like Equinox, where you can appear as a white knight, and you can acquire it without, in today's monetary conditions where money is, after taxes, practically costless, we can acquire it without diluting 1% the existing gold exposure. You'd have to be counterintuitive, like not taking advantage of the potential billion-dollar annual cash flow that you can get in. And that's the kind of free cash flow, like for any company, that provides the lifeblood of any corporation that's aggressively determined to grow.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.
For 30 years, Creamer Media's engineering news has delivered unmatched insight into South Africa's real economy. Subscribe now and go to engineeringnews.co.za for the real economy in real time. Engineering news, not just for engineers.